You're welcome back, guys. Now, let's look at IFRS 2 on share-based payments. Okay? Share-based payments. There are some companies whose shares or share options are regarded as a valuable currency. Okay? Valuable currency. Like Apple, or Facebook, Amazon, or Microsoft. Many companies like that. Their shares are very valuable. Those companies commonly use share-based payments to obtain employee and professional services. That is, instead of paying cash to employee for their service or to suppliers for the goods supplied or to other professionals for their professional service, these companies issue shares or share options to the employee, to the suppliers or professionals in return for the goods and services they deliver. So transactions whereby entities purchase goods or services from other parties, such as suppliers and employees, by issuing shares or share options to those other parties, are becoming increasingly very common. Also, share schemes are a common feature of directors and executive remuneration, and in some jurisdictions or in some countries, the tax authorities may offer tax incentives to encourage more companies to offer shares to employees. So because of the increasing use of share-based payments, there has been incessant questions about the accounting treatment of such transactions in companies' financial statements. Hence, the reason why we'll be looking at this standard to explain you how you recognize and measure share-based payments. So, in this section, we will cover the following. Firstly is we will look at the objective and scope of IFRS 2, which is the standard on share-based payments. Then we'll look at recognition and measurement of equity-settled share-based payment transactions. Thereafter, we will look at recognition and measurement of cash-settled share-based payment transactions. After which, we'll look at share-based payment with a cash alternative. And finally, we'll look at disclosures. In this video, we'll start with the objective and scope of IFRS 2. And the objective of IFRS 2 is to specify the financial reporting by an entity when it undertakes a share-based payment transaction, and to reflect the effect of share-based payment transactions in its profit or loss and financial position. These are the objectives of this standard. And IFRS 2 applies to all share-based payment transactions. There are three types, okay? One is equity-settled share-based payments, okay? And this equity-settled share-based payment transactions is the one in which the entity receives goods or services in exchange for equity instruments of the entity, including either shares or share options. Okay? And this is increasingly common for a startup entity, okay, that needs consultancy service and similar services. So what the startup does is they will issue shares, okay, to preserve the very scarce cash resources, okay, and they will give the supplier an opportunity to share in the entity's success, okay. And usually this must be a startup that is promising, okay, like during the period of VR or augmented reality, okay. Any startup that is into this, any supplier, any consultant want to be part of it. So instead of collecting cash from such a startup, they would like to collect their shares or share options, okay. That is equity settled. Now, we also have cash settled share-based payment transactions. And these are share-based payment transactions in which the entity receives goods or services in exchange for amounts of cash that are based on the price or value of the entity's shares or other equity instruments of the entity. Okay? Now they receive cash. But this cash they are receiving is based on the entity's shares price. Okay? We'll explain that in detail very soon. And the third type is transactions. Okay? In which the entity receives or acquires goods or services, and either the entity or the supplier has a choice as to whether the entity settle the transaction in cash or other assets or by issuing equity instruments. Okay? So this gives a room for either the entity or the other party to decide whether the entity should settle in cash or in equity instruments. Now, the following are not covered by IFRS 2, okay, because they are not share-based payments. A transaction with an employee or other party, neither a supplier or other professionals, in their capacity, okay, that is the employee, the professional, the consultants, the supplier, okay, in their capacity as a holder of equity instruments of the entity is not a share-based payment transactions. For example, if an entity grants all holder of a particular class of its equity instruments the right to acquire additional equity instruments of the entity at a price that is less than the fair value of those equity instruments, and an employee receives such a right because he or she is a holder of equity instruments of that particular class. You see, the granting or exercise of that right by the employee is not subject to the requirements of this IFRS. It is not share-based payment. Okay? 2 is that any transaction in which the entity acquires goods or part of the net assets acquired in a business combination as defined by IFRS 3 under business combination is not a share-based payment. So, equity instrument that is issued in a business combination in exchange for control of the acquiree are not within the scope of this standard. They are not share-based payments. All those principles that you learned under group account, where an investor acquire equity interest in another entity and it becomes or he has control of that other entity, you know that he's acquiring an equity instrument. That is not share-based payment, please. Okay? Also is transactions in which the entity receives or acquire goods or services under a contract within the scope of IAS 32 on financial instruments presentation and IFRS 9 on financial instruments are not share-based payments. Okay, these are separate contracts. Okay, the aim of which is to become a shareholder of that company. It's different from when you are receiving goods, okay, and you don't want to pay cash and you are paying in your shares, okay, all these items mentioned are not covered by IFRS 2. They are not share-based payments. Now, let's move on to the next level under share-based payment. We'll be looking at recognition and measurement of all these types of share-based payment I've mentioned. But before then, there are certain terms that are peculiar to share-based payments. Let's look at those terms so that your understanding of share-based payment generally will improve when we dabble into it. See you in the next video, where we'll be looking at the key terms under share-based payment. Cheers, guys.